Hello everyone, this is Evan here from the Trade Risk on Wednesday, January 11th with a midweek market recap video. We're going to cover all of the major markets, current market environment, sector analysis, and then finish off the video with some individual names. We'll jump right into things today with the S&P 500 finishing up about 0.25% on the day, and that was following up some intraday volatility. We saw a little bit of a knee-jerk reaction lower this afternoon, but we did rebound and close the day at the highs. So let's take a look at where we stand here in the S&P 500. Remember, I got this sort of trend line drawn here from the highs. If we were to look at the cash market, you can see it's really more of a horizontal flat line of resistance that we've seen up here right around this 2276 level, more or less. Still have the dividend skewing the SPY ETF just a tad. If we look here at the cash market, you can see we're still continuing to bump up against these highs, and we've now pulled off, basically 3 days of kind of pulling off the highs. After we made a new all-time closing high last Friday, we came into the week a little bit softer on Monday, pulled back, some volatility on Tuesday, but ended flat on the day, and then again we saw some volatility intraday and closed here near the high. So after 3 days of pulling off Friday's new all-time high, perhaps it's time to take another run at that level. And for now, based on today's intraday action, you have a good line in the sand. If we started to really lose this 2261 level, looking at the cash market, if we go back to the SPY, that level is going to be right around 225.60. If we start to lose these lows, that's when you can at least have your very high upper level momentum line in the sand in place, and that would be a point to perhaps tighten up some exposure, or depending on your strategy, tactically short, however you want to approach it. So that would be the lows here from today. I think are going to be a good line in the sand, and then on the upside, we want to see if we can get some follow through tomorrow above 227.50. more or less, and then very quickly we'll be back to all-time highs. But from a broader term perspective, I still am very optimistic here and constructive on the price action that we're seeing across different sectors in the market as a whole. Weekly chart, again, looking back at this bigger picture time frame, still in a very healthy kind of structural uptrend here, with no real signs of slowing. We've been digesting for 4 weeks now. We haven't really gone anywhere, so I don't think we're overbought or very overstretched to the upside at this point. I think this is all pretty healthy action, and I would not be surprised to see price continue higher later this week. That is the path of least resistance right now. IWM, this was perhaps what was going to throw a wrench in this rally, where we saw some weakness here late Friday or late last week, Thursday, as this started to really diverge from some of the other major averages. And so far, it is stabilizing. It has held support. It held right where it needed to. If we really started to, lose 135 and see some sharp selling kind of really ignite in this market, that would have me concerned. The difference between the lagging index, the lagging IWM, and the rising Qs, a little bit concerning when you have such a split market of one index really kind of powering higher. But over the past few days, yesterday and today, we've stabilized here in the small caps, got some much needed bounces here. Now we want to see if this strength can actually hold, or again, strength or sort of this defensive support bounce hold, and then eventually kind of challenge these highs back up here. That's what we'd be looking for. Again, bigger picture. Remember, we had a monster move here in the Russell 2000. The small cap saw the biggest advancement here since the rally, since the election of last year. So to go 5 weeks sideways within 3% of all-time highs, to me is that's as healthy as you can get. There's nothing extraordinarily bearish here, and we could continue to pull back and have a larger retracement, and you'd still be in the context of a well-defined uptrend. So keep the bigger picture in mind, not trying to blindly be a bull here, but respecting certainly the sharp rally that we saw here towards the end of the year, and now again, very bullish consolidation through time. Could turn bearish, but let's stick with the trend for now and try and remain optimistic. Again, if we start to see us really convincingly lose these lows here, then you can start to adjust, tighten up, get short, however you want to approach it based on your strategy and time frame. The Qs continue to just run away with it. So new all-time closing highs here. You can look at the composite as well. New all-time closing highs here, a little bit maybe long in the tooth. This has been carrying a lot, or at least holding up the market, I would say, over the past couple of days at least. So maybe it could use a little bit of a pause if we saw that rotate into IWM, or perhaps a breakout here in the S&P 500. All is well, and we still have enough sort of participation in there to keep this trend alive. One other point, and we put this out in a blog post the other day, with earnings coming up, it could just continue to be some big chop fest here. We may not get a sharp kind of breakout move and fresh momentum with surges of buying right before we have all of those headlines and all of some very key earnings coming out in the next couple of weeks. We're probably going to want to see, or I'd imagine there will be some squeezes and some runs ahead of that, but largely I would expect some of the big money to be sidelined to see how some of those reports start to come out and some of the guidance to come out for later this year. So that's what we're looking at here in the broad market. As far as how we're positioned, we've been buying this. We're still moderately did a little bit more buying today, but we came into the day long as we came into the week long, and we've been sort of rotating through positions. So sticking with the long thesis for now, not all in on the long side, but certainly taking advantage of some of these names that are trying to outperform. So with that, let's get into some of the other major markets. We'll go to TLT, which had a nice rally going intraday, settled a little bit off of the highs. You can see it's coming right back into sort of these prior swing highs here, right above 122, right into this 123 area. Maybe this is some nice kind of long-term or this range that it's going to eventually carve out. Maybe it has to come back down and fill in a little bit, and then we'll get this period of maybe a 5, 6, 7 point range here in TLT. I think that would be healthy. Remember, this did come off of some pretty harsh selling throughout the end of 2016, so a little bit of a bounce here, coming back into some of this prior swing highs. Would expect it to have some difficulty just moving higher, right at this time. GLD, pretty much similar situation. These charts have been pretty similar in their trend. GLD coming to this gap here, at least as to the ETF, pushed into that gap, and then you can see pulled off of it a little bit. Still finished up 31 basis points. It's had a nice bounce off the lows. MACD turned positive. Some constructive things going on here. Technically, still in a downtrend on the daily. If you're the bigger trend weekly, depending on how you want to define the trend, but from these big swing lower highs, November being this big swing high up here. So keep that in mind. Silver also, still continuing to bounce. A lot of overlap, a lot of tight action here in silver. Just take that, but still in a very similar formation, coming back into some prior highs. Maybe we push back into $16, but expect that to have at least some supply up here from November and December. If we go to the oil market, USO, very constructive rally here today, 2.71% to the upside. I like this rally. This is a market that I would have expected to really sort of roll over or continue to see weakness, especially given the last 2 days of action as we kind of closed on the lows, and we really just saw some really sloppy sort of technical action here over the past 2 sessions. Today, reversing almost entirely yesterday's action is sort of a surprise, and that to me generally can lead to some offsides action and can lead to further price advancement. So I sort of am a little, the chart's a little ugly here, but I think tactically USO looks interesting for perhaps a little bit of a reversion play. Especially if we get through today's highs yet tomorrow, 1147 or so, I think you might be able to get a squeeze back up there. Technically still looks rough, but I do like the sharp reversal today. Could be a fake out. I'm not involved in it, but looks mildly interesting. And then UNG also holding higher. This low here from Monday is proving to be, putting in a short-term bottom here in natural gas. See if that sticks for later this week. It's in a tough spot. Momentum was sharply lower to start the year here. Needs more time. I wouldn't be that interested in it one way or the other, but there's clearly some volatility and opportunity there in natural gas. Getting into some of the sector analysis, XLK, so this is the bright spot here in the market, as last Friday, we got a new all-time closing high here. We got a resolve higher or above this range, above all these prior highs, and then we've continued to sort of hang up here and base and consolidate at that, more or less at those highs, and then today again we're seeing a new close at highs. So very constructive action. This is what's been helped leading the market higher, holding the market up. So continues to look good, continues to look strong. IYT, this one we were watching as one of these names or sectors, transportation average, that had a strong move throughout November and December of last year, and then has been quietly consolidating. Today we're getting that nice uptick, so we're breaking above about a 7-8 day high here, and it could be a nice sort of trend resumption back to the upside in IYT. Very constructive to see. XLI, another one that we were watching here that's been kind of sleeping and consolidating and working off some of these overbought conditions throughout the end of last year, has been ticking up here and trying to make a new closing high of about 10 or so days. So XLI also looking good, and XLF continues to sleep, continues to consolidate, but that's okay because it did have a tremendous move, particularly for this sector, and the longer it can kind of consolidate through time and not give back any gains, I think is very constructive. So I like the potential there in XLF. XLI, IYT, we've been talking about that, and you got two of them starting to poke the heads up now, and that again speaks to what could fuel this market higher in the near future. XLV, this was got the short end of the stick today, mostly I believe off of comments from Mr. Trump on drug pricing. So XLV retracing a little bit. I mean, you saw a bounce off of the lows, so we did get kind of a move off of that $70 level. Biotech also more specifically getting a little bit of volatility. Remember, this was the strong sort of winner here to start the year, and it's still up nicely on the year. 5.61% was the gain on the first week alone. We're down 0.8% now, so looks like we still have a 4% gain here in IBB on the year. Let's see if we can put in a higher low here and not just completely roll back over. But we'll have to stay tuned on that. But a little bit of weakness there today in that sector. Now, with that, let's get into some individual names. Apple looking great, right? Powering higher now, taking out the resistance, taking out these highs here from October of 2016. Looking good, stair-stepping higher highs, continues to work. Looks like it wants to just continue to rally into its earnings release. That's constructive. Google also, saw some volatility, came all the way down to the lower 820s today, but then finished at the highs, right at this cluster of highs here from the past 3 days. If we can get follow through tomorrow, this looks good, and very quickly we'll be back testing the all-time highs in Google, so making a little bit of a run before earnings. And Amazon looks great the same, right? Just similar to Google, it had a strong, several day move here last week, consolidated and worked those sort of extreme overbought conditions off for a couple of days, closed at the highs today. Follow through gets you back into this gap, and very quickly could be trading, above $800 later this week. So Apple, Google, Amazon, all looking pretty strong to the upside. Facebook, just the same, right? This closed out the gap today as it moved above yesterday's highs, came back into this 126 level and basically finished the gap. Pretty overbought here, but a nice move from Facebook. All right, and with that, I think we'll end it there. So thank you guys for tuning in and watching. If you haven't subscribed to our channel, please do so. Bottom right-hand corner just keeps you up to date with all the latest that we publish. Hope you have a great rest of your day, and I will speak to you soon.